in the past. Our feeling is that Indian equities return over next 10 years will be nominally lower than what it is offered in the past. But in real sense, it will be as good as what is offered in the past. What do I mean by this? In the past, our inflation was double digit, and hence equity returns were also in double digit. Now our inflation is in mid-single digit. Obviously, our nominal returns will come down. Now they will be in lower double digits or higher single digits. So your nominal returns in equities will come down, but the real return may remain the same or even better. Number two, when you are investing in equities, it is invariably linked to higher corporate profitability. If companies make more money, stock markets will go up eventually. We believe today for India, macros are so good. We have highest foreign exchange reserve in our history, $635 billion. It's fourth highest in the world. This year, our software exports will be more than our oil imports. Our inflation is moderate. This is fifth or sixth month running where our inflation is lower than American inflation. The spread between American government securities and Indian government securities and American inflation and Indian inflation is maximum in our favor at any point of time in history. Global investors are investing in India. They want to move away from China, and India is their natural choice. We are getting as much money as we need on foreign portfolio side as well as foreign direct side. There is generally a consensus among political class about development and growth. So overall, our macros, our big picture is supporting growth. Corporate India will do well in that phase. And if corporate India does well, Indian equities return will also be good. Coming to the fixed income market, interest rates have risen in recent times. Today, Indian markets are discounting almost 3 to 4 rate hikes by RBI. My feeling is that RBI will be data dependent. And if inflation remains in their target range, then maybe 3 to 4 rate hikes will be all what we need. Now, if you are wanting to invest into fixed income, my recommendation is to consider investing in hybrid funds. They are more volatile than pure fixed income funds, but they will also give higher return than fixed income funds. We believe even though interest rates are rising, they are unlikely to deliver better returns in nominal or even real terms. And hence, having hybrid funds in your portfolio becomes critical. For extremely conservative investors, Kotak debt hybrid scheme kind of product can be looked at, which has equity exposure of 15 to 25%. For someone who wants little aggressive exposure, can look at equity savings scheme. They have between 25 to 50% equity exposure. Someone looking even higher risk can look at balanced fund, which has around 70 to 80% exposure. Someone who doesn't want to do allocation between debt and equity can look at balance advantage fund, where fund manager takes the call based on the valuation. But in this bouquet of debt hybrid scheme, equity savings scheme, balance advantage fund or balanced fund, hybrid investors will be able to create appropriate portfolio based on their risk return profile, and that will give them slightly higher volatility than fixed income funds, but it will also deliver better return than fixed income funds. Coming to finally offshore businesses, offshore funds. These are the funds which have been introduced recently. They give you exposure to US market, China market, or global emerging market or global markets. They allow a person to save in dollar assets or other global currency. It gives you diversification away from India. Many of these funds have done well. Many of these funds haven't done that well. Now, why should one consider some allocation to offshore funds in their portfolio? Most importantly, it gives you diversification away from India. God forbid, if tomorrow there is skirmish between India and China, our markets and your portfolio will get impacted in local markets, but offshore funds will not be impacted. Number two, it gives you exposure to certain businesses which are not present in India. We are all customers of Netflix, but we can't own Netflix business. Offshore fund gives you opportunity to own those businesses which you are consuming in India. Offshore fund gives you diversification. It gives you exposure to businesses which are extremely different from what you are going to get in India. And that's why they should become 15 to 20% part of your portfolio. This is how broadly we see the market on equity, debt, and offshore. Happy to take your questions.
Thanks, Nilesh. Thank you very much. So more than happy to take any question at this point. You can write your question on the chat box also.
Yeah, I think the first question is from Mr. Jaideep. You can unmute and you can ask the questions.
Yeah, Nilesh, I hope I'm audible.
Yes.
Yeah. So my question is, I mean, we are looking at the export numbers, and first time in the history, probably our IT exports have gone beyond the oil import numbers. Would it be a fair assessment that in the near future, we could turn into a current account surplus country? And if you believe that, what are the positives that we can take from there?
So, Jaideep, it's very difficult to take that call at this point of time because one, oil prices are running high. They are already at $80, $85 a barrel. We believe oil prices are on its way to go into 3 digits. Now, that being the view, there will be some pressure on our current account. Can India turn into current account surplus? Well, it's possible if our production-linked incentive scheme works out. At one point of time, we were importing $8 billion of mobile phones in FY 2015. In FY 2022, we will be net exporter of $5 billion of mobile phones. That's delta of $13 billion. Now, if we can do that in many other sectors, then obviously we will be current account surplus. The second thing is our import of gold. We are on course to import about $55 billion of gold this year. Assume that $25 billion will be exported. That's still net import of $30 billion. Now, if by a stretch of imagination, India becomes zero importer of gold, $30 billion saved, your current account will be surplus. If you assume that, like Indians started exporting silver during Hunt brother time, we start exporting gold, then certainly we will be in current account surplus. So there are so many permutations, combination possible that India could be current account deficit or India could be current account surplus. If we are in deficit, rupee will depreciate. If we are in surplus, rupee will have appreciation pressure and RBI will have to really absorb dollars and swell the FX reserves to keep rupee where it is today. So I wouldn't hazard a guess. You have to live with the data on a quarter-to-quarter basis and then take the call. For us, that way job is easier because there are so many technology companies, pharma companies, where engineering and capital goods companies, where we could see exports increasing. When we want to play for exports, we play in these sectors. There are so many companies which are becoming part of global supply chain management. They will supply air conditioners, lighting equipments, mobile handsets, electronic components, electrical fittings from India. Again, they are available in listed market. So we try to divide current account deficit or surplus on a fundamental basis, on a bottom-up analysis, who are exporters, who are substituting imports, and who will be dependent upon imports, which we can avoid.
Thank you, sir. Sir, the next question is from Mr. Biman. Which sectors are expected to benefit from diversion from China to India?
So one, mobile handset is one big beneficiary. We were producing 27,000 crore worth of mobile phones in FY14. It came down to about 19,000 crore in FY 2015. And then lots of things worked with the support of government. In FY21, our mobile manufacturing is 2,20,000 crore. From 3 factories, we are now having 268 factories. The world's largest mobile handset manufacturing plant is now operating in Noida. Right now, it's making about 6 crore mobile handsets, and in a couple of years, it should be 12 crore mobile handsets. All the big suppliers or manufacturers of mobile phones, Wistron, Foxconn, Pegatron, Samsung, they are all present in India. Now, this is the success story. Do we always have success stories? Only answer is no. Our failure story is in textiles and garments. Even PLI scheme of technical fibers couldn't take off initially. And I'm on the board of Arvind Mills Limited. So we did engage with the government, and fortunately, they were kind enough to launch a second revised scheme. And now we believe technical fibers, India will become a player. So it's not just the scheme alone, but also how those schemes are executed on ground, which will define whether it's successful or not. But today, PLI scheme is likely to be launched or is already launched in about 13 odd sectors: auto components, electricals, electronics, mobile phones, bike trucks and APIs, solar panels, technical fibers, technical textiles. These are some of the sectors which come to my mind. And we believe, depending upon how we execute those policies on ground, we should have success over there. We believe PLI schemes put together incrementally will add 1% to India's GDP in the years to come, year after year. So there are lots of hopes for production-linked incentive scheme, and we will see some of the success stories emerging in that sector.
Thank you, sir. So the next question is from Mr. Vishal Julka. Impact of unicorns in 2022 on the market, sir.
So Vishal bhai, I'm not able to understand your question appropriately. There are different ways a unicorn will have an impact on economy as well as market. The first, when Narayan Murthy, Nandan Nilekani, Chris Gopalakrishnan, Shibu Lal, they were all working in Patni Computer Services in Pune. And they saw how computers were working and how that was the future. And then they came together to set up Infosys. So Patni kind of became a driving force for them to set up their own venture. So many people worked in Infosys, and then they separated out to create either their own IT companies or their own ventures. And slowly, India became a powerhouse in IT services. When unicorns are getting established, it becomes a benchmark or a role model for later generation entrepreneurs. Like Azim Premji, Narayan Murthy, Shiv Nadar, enthused entrepreneurs of India, young generation of India, same way Oyos or Flipkarts or Byju's founders are enthusing another set of entrepreneurs and young generation. So one, unicorns will definitely encourage entrepreneurship and risk taking. In India earlier, IIT, IIMs were always going abroad. Now majority of them are staying back because they believe they can become entrepreneur. So we will retain our talent, we will become role model for entrepreneurs, and hopefully they'll create bigger and better growth. The second thing of unicorn is the valuation for the listed markets. Today, in unlisted market, companies are trading at much higher valuation. So in some sense, they also act as a magnet for listed companies' valuation to go up. If in unlisted market, you are trading on a price to sales or a price to vision, in listed market also those conditions, those things will apply. The third thing is the business model of unicorns. Many of the business model, many of the unicorns are disrupting and removing our restrictions. For example, today, a small, towns or small villages does not have great education support. In physical format, schools are not having right infrastructure, teachers are not qualified. But the same thing can be overcome with a digital approach, where the best teacher can take a class for thousands and thousands of lakhs of students. We can straight away jump to higher productivity, higher efficiency. So this unicorns, by creating disruption, by removing inefficiencies, will also create productivity and better growth. I can keep on going on and on, but clearly unicorns will impact market from a valuation point of view and economy from a growth point of view. And that both should be positive for market.
Thank you, sir.
Thank you.
The next question is from Mr. Raghav Goel. How to decide amount of allocation between equity and debt? There is one more question in addition to this, like, is it a good time to rebalance portfolio?
So you need not rebalance portfolio on a daily basis. This is art, it's not perfect science. My recommendation is that you look at your portfolio on a quarterly basis, or unless until a very, very big event has happened in market. Like suppose if you had looked at your portfolio on 28th of Feb, undoubtedly on 27th of March, you should have looked at your portfolio, because between Feb and March 20, markets were down significantly by more than 40%. But if you have looked at your portfolio on, let's say, 31st October 2021, then there's no need to look in between. You can look at it on 31st of Jan 22 also. Number two, what is the right allocation between debt and equity? It all depends upon your investment objective and risk profile. I'll give you a small example. In March 20, right at the peak of COVID-19 and bottom of the market, I got a call from a colleague of mine saying that, Nilesh bhai, can you please speak to my family doctor? I spoke with that doctor and he said, Nilesh bhai, I am a doctor, I am a medical person, I earn well, and I had invested in mutual funds and stocks. Now all of them are down, and I really can't sleep peacefully at night. I just want to redeem everything and put it into bank deposits. And when I told your friend, he said that, why don't you speak to Nilesh? I said, sir, today we are in an absolutely uncertain time. We don't know how COVID will impact. Market is fearful. There is blood on the street. My recommendation is that please wait for 3 months and then we will see. What else I could have told him in the last week of March, where I had no idea about COVID and I had no idea about market, except that it has become very, very cheap and people have become extremely fearful. Normally, these are the buying opportunities. The gentleman heard me but didn't respond. 3 months down the line, again, my friend called up saying, Nilesh, can you speak to my friend? I picked up the phone and he said, Nilesh bhai, aapne sahi bola tha. In 3 months, markets have given more return than what I would have get in bank fixed deposits over 3 years. I didn't listen to you in March. Now, what should I do? I mean, I didn't tell him on face, but in my heart, I had the answer. Now, please sleep peacefully. That's what you wanted. Now, obviously, you don't want to say those things to people, but this is the reality. The family doctor had a very, very conservative risk profile. He was more accustomed to a fixed rate of return rather than a very highly volatile equity market or stocks. It will be far better to offer him a Kotak debt hybrid scheme kind of product, a Kotak equity savings scheme kind of product, or Kotak balance advantage kind of portfolio. In his portfolio, there has to be higher allocation to fixed income funds and little allocation to equity. That would have ensured that he would have stayed invested throughout the month of March 20. The risk profile is extremely critical. Most people feel that I can take higher risk when the returns are positive, and they all end up avoiding risk when the returns are negative. But please appreciate that this is like a cricket match. Some ball will be Yorker, some ball will be bouncer, and some will be half volley. Unless until you have fixed the match, every ball can't be half volley. So look at your investment objective, look at your risk profile, sit with your relationship manager, sit with Somyajit, Anindya, and find out what is the ideal allocation for you. Each individual will have a different allocation. Please don't build allocation looking at your neighbor's portfolio. That will invariably end up in disaster.
Thank you, sir. So, sir, although you have covered this question on the budget side, like expectation on the sectors, but one or two sectors which you really think that are going to benefit more after the budget.
So I can talk about what I have recommended to Finance Minister during our consultation, and also what I think is needed, but I have no idea whether that will come in the budget or not. My recommendation was that today trade, agriculture, private investments, and government spending are above pre-pandemic. But the most important component of our economic consumption is well below pre-pandemic. And this consumption is not lost because of people like me or Somyajit. We are spending what we were spending before pre-pandemic. There might be some lowering because I can't go and eat out like before, or I can't go and watch a movie, but our consumption has not suffered. I haven't gone and told my wife that please control home expenditure by 15-20% because there is pandemic impact on me. But many people at the bottom of the pyramid, both in rural India and urban India, have been hit very, very hard. They have to cut their family expenditure by a big margin. Imagine a school bus operator, a tourist guide, a teacher who has lost his or her job, a hotel operator, a restaurant worker, a tourism travel agent. These are the sets of people who have been hit very, very hard. Their balance sheet has gone for a toss because they have pledged or mortgaged their assets to survive. Their income levels have come down. And this budget should take care of this particular sector by providing either direct benefit transfer or a Manrega kind of solution. I have recommended urban Manrega because there is already rural Manrega or Manrega in rural India. Now, this direct benefit transfer is like giving a fish to a person. He will be dependent upon you. We also have to ensure that he's taught how to fish. How can we do this? The biggest sectors which employ people in India are textiles, automobiles, construction, housing, and real estate. Now, in automobiles, there is limited thing you can do because there is chip shortage. Even if I give incentive to people to buy car, how will car company produce? Because they don't have enough chips. So we have to focus on what can be executed on ground. Housing, real estate, construction. Today, everything is aligned for it. Interest rate on housing loans are 6.5%. For certain segments of people, affordability of house have increased tremendously because house prices have come down and income has gone up. Because of RERA, consumer and developer interest is aligned. Now, developer cannot kick consumer like a football. And most importantly, in work from home, all of us need bigger houses. Put all these things together, we have a fast growing housing turbocharge it. If we turbocharge it, it will employ millions and millions of construction workers, which are essentially going to come from bottom of the pyramid. How do we turbocharge it? One, state governments are giving stamp duty concession. Automatically, people come and prepone their purchases. Second, I can give tax concession on house buy, whether first buyer or people who are already owning house. If more monies are kept in the hands of taxpayers, they will go out and spend. Consumption will get supported. So we can give support to housing construction, real estate, which will, be creating jobs. The other thing is textile sector. It employs again a large set of people. We just have to copy what Vietnam, Bangladesh, Sri Lanka are doing in their textile sector. They have no big cotton farming. They don't have big spinning capacity. And yet they are bigger exporters of garments from their country than India. If we capture that space, then it will employ millions of women. Every woman, when a man gets a job, many times woman of the household ends up leaving a job saying that ab husband kamayega, hum log ghar pe baithenge. But when woman gets a job in a household, it creates opportunities for other jobs in the economy, because now you will be eating out more, you will be employing maid or some other household help. So employing women in textile sectors will also create multiplier effect in economy. So I expect budget to be pro-consumption, either urban Manrega or incentive to housing or incentive to textile sector or overall improvement in ease of doing business so that more people can be given employment.
Thank you, sir.
Now, this is all my expectation. I have no idea whether this will happen in budget or not. But in our presentation as MP, as individual market participant, we have shared this with the government.
Thank you, sir. So the next question is from Mr. Suman Das Gupta. IT sector has been pioneer for last few years. Right now, what is your view on about IT? Isn't it a bit overvalued? Any specific sector to invest as a tactical call?
Undoubtedly, IT sector has done extremely well in recent times. We believe large cap ITs are still reasonably valued, albeit at the higher end of that reasonableness. But many of the mid-cap IT companies, we believe, are overvalued. Now, overvaluation does not necessarily mean that there will be price correction. There could be just time correction so that earnings can catch up with the fundamentals. So we do believe that large cap IT will outperform mid-cap IT, probably because of time correction in mid-cap IT. And we do believe that today, from a sector point of view, it is time to be equal weight IT in our portfolios. But within that, we are overweight large cap and underweight mid cap.
Thank you, sir. So there is one question from Mr. Jaydeep on the EV segment in India. Recently, Volkswagen chairman said software will be differentiator. India slowly having established its power in software. Do you believe that India can become EV capital of the world?
Extremely unlikely. For running electrical vehicle, do we have shortage of talent? Answer is no. All of you know that number 2 person in Tesla behind Elon Musk is a gentleman from South India, and he studied in Guindy Engineering College, if I'm not mistaken. I'm forgetting his name, but a product of Guindy Engineering College, Tamil Nadu, is the number 2 person in Tesla, and he's the guy, which is why Tesla is being produced. So we are not short of talent. Where we are short is the capital for funding this kind of ventures. We prefer to invest in gold, real estate, but unlikely that we will invest in a private equity or venture capital fund. 70 to 80% of our unicorns are funded by offshore investors rather than local investors. So we are not short of talent, we are short of capital to create this kind of business. Number two, we are also short of raw materials to create this kind of business. Now, maybe we have those raw materials like rare earth, cobalt, and we haven't identified them, or maybe we don't have. Unless until we get a secured supply of raw materials which can create batteries, we will remain vulnerable in this industry. Now, today, there is also question of head start. US, China, Germany, they all have a big head start over India. Now, how do we become EV capital of the world? Can we get talent like number two in Tesla to come back in India? If that kind of person comes back and sets up shop over here, undoubtedly there is a good chance of becoming EV capital. In China, how do they bring their people back? Many decades ago, I was speaking with one Chinese scientist who had come to visit India thanks to a brokerage company. And he was from Inner Mongolia, did PhD in US, was working there, came to India to talk to us. And then later on, he mentioned that he'll be returning back to China. If he had not returned back to China, his family in China would have been in danger. Now, we are a democratic country, so we can't do this kind of measures. But this is how China has built their capabilities. Nortel was a Canadian company in telecom. It is rumored that China had access to all their patents and knowledge base, and they actually copied all those things and created UA and Nortel breakdown. Now, again, as Indians, we are not good at such kind of hacking and chori. So we'll have to do business in the right way. By some grace of God, if the people who are number two in Tesla and companies like that come back to India, if Indians, instead of investing in real estate and gold, starts investing with this kind of ventures, and the government, discovers that there is rare earth material for making battery, minerals which are required for making battery are present in India and we can supply. If those things come together, then certainly we can be EV capital of the world. But you also know that those probabilities are very, very low. So I wouldn't hazard a guess on whether India can become EV capital of the world or not.
Thank you, sir. So we have a last question, sir. As we are also running out of time. So it is from Mr. Viman. Which sectors do you think are going to be benefit from the pent-up demand if COVID goes, hopefully?
A tough call, because will COVID disappear at one go? As of today in Omicron, it looks like that Bombay, Delhi will see a faster decline because we started early. So we will probably have a wave in COVID where it will hit some towns. In some towns, it will be receding, and so on and so forth. Now, one thing is which businesses will pick up once COVID disappears. That's very easy to answer. Airline, restaurant, film and entertainment industry, education, hotels, tourism, travel. These are the sectors which will immediately benefit as people go on revenge shopping, revenge spending. Will their shares also do well? Answer is probably yes or no, because what has been discounted at different prices will become very, very critical. Now, if you look at, for example, a listed airline company share price, today it has not fallen in relation to their fundamentals because people are assuming that the big players of aviation industry, Wise, SpiceJet or Go, will be hit much, much harder. And once aviation sector opens up, the leader will benefit maximum because they have the financial wherewithal to survive and lead. Now, in case COVID disappears and the company will do well from a business point of view, undoubtedly no, and undoubtedly yes. But will the share price also do well? We don't know, because the actual business results will have to be better than what is priced by the market today. The same thing is in films and entertainment. Multiplex shares have not come down because they have assumed that once there is partial opening, full opening, they will be able to create another business model. So to a great extent, I will be playing these themes not just on the COVID disappearance, but more from the point of view where is there competition reduction, and will the leaders be able to take advantage of the reduction in competition?
Thank you, sir. So with this, I would like to hand over the
I had a question. Can I ask?
Yes, you can ask.
Nilesh bhai, you had mentioned earlier in the evening that with the developing economy, the nominal returns which we expected from, say, mutual funds or from equity would come down, but they will still be better than other asset classes, and it will be in, say, single digit higher or maybe just about double digit. While that is understandable, if someone is looking at, say, in the teens return or higher, is it only the private equity, or what would you suggest for him?
So if you are looking at higher returns, then you'll have to take higher risk. So compared to large cap, small caps have delivered better return in last 10 years, 15 years, 20 years, and so has mid cap. So either I can increase allocation to small and mid cap in my portfolio, automatically my return will go up. The second way is to go sector specific. I mean, there are always time periods where one sector will do far better than the other sector. Now, if you can rotate your portfolio in a manner where you're moving from a performing sector to another performing sector to another performing sector, your returns will go up. The third higher risk is leveraged. In March 20, if you had taken leverage and invested, today your returns would have been significantly better. So either by taking concentration, either by going into higher risk, higher return propositions like mid cap and small caps, or by taking leverage, I can still generate better return on my portfolio.
Thank you, Nilesh bhai. I had another totally different question. Can I ask you?
Yeah.
Nilesh bhai, we keep on hearing this, and this is something which you mentioned also, that direct money transfer for urban Manrega, which is absolutely understandable, and this is the sector which will create demand, which you mentioned also. And this is something which has baffled me, and I've heard economists speak about it. So my understanding is that there is about 60 crores, 65 crores of Jan Dhan account. And by direct benefit transfer, we mean through that mechanism. Now, our fiscal deficit would look better. Even if we talk about 1,000 rupees or 2,000 rupees to this 60 crore people, we are talking about 1 lakh crore, which will have a many more multiple effect. Are we in a position to take that sort of a call?
So do we have fiscal space to spend money? Answer is undoubtedly yes. How do we raise resources without raising taxes? Individually, I pay 43% tax. It's one of the highest in world. So there's no point in increasing the tax burden on individuals or corporate and raise resources. There's also no point in raising debt to fund your spending because we are already at 90% of GDP in terms of debt. What we have to create is either increase the velocity of money so that money starts moving fast in economy. If money moves 1 or 2 times and my average GST is, let's say, 12%, I make 12 rupees. But if money moves 2 times, I can probably make 24 rupees. And if money moves 3 times, I can probably make 36 rupees. It's a very, very simple arithmetical example. Obviously, life doesn't work in that simple manner. There are far more complexities. The second is to monetize my assets to raise resources. We have to take tough decisions. If we had divested Air India in 1990, when we were meeting our first crisis, that would have left government with more than 150,000 crore to spend on other purposes. And there are so many Air India we are managing. If we had divested BSNL, MTNL when in telecom, they were monopoly operators. There was no Vodafone, there was no Jio, there was no Bharti, and people would have paid, hand over fees to get into MTNL and BSNL. If I remember correctly, BSNL was the first Indian company to make 10,000 crore of profit, long before Reliance achieved that number, or IOC achieved that number, or ONGC achieved that number. MTNL's market cap was higher than Reliance Industries Limited for a considerable period of time. Now, when you knew you were opening telecom sector, when you knew that government companies by and large have always lost to private sector, why didn't you first divest Air India and then open the aviation sector? Why didn't you first divest BSNL, MTNL, and then open telecom sector? If we had taken those two decisions, in my opinion, we would have got close to 150 plus 250, 400, and plus whatever we would have got, maybe 500 to 600,000 crore. I mean, this is the kind of loss we are incurring because we are unable to take tough decisions, right decisions. The wasted interest comes and takes away our decision making. So we have to monetize government's resources to raise non-tax revenue, and those money have to be spent wisely so that the overall growth picks up. One reason why China is 5 times bigger than India is because they have increased velocity of money in their economy. Their debt to GDP ratio is 4 times higher than India officially, and in my opinion 5 times higher than India unofficially. That's why their GDP is 5 times higher than us.
Thank you, Nilesh.
Thank you, Nilesh. This is the 4th year that you have dedicated your time to clients of WealthApp, and from all of us, heartiest thank you. And in the last 4 years, since 2018, we started, Sachin and Arnab, we all have been there. Your contribution to our business, especially your thought leadership, has been of great support. We have always abided by your futuristic outlook. I still remember last year, 22nd Jan, first time you said that, how the housing sector is going to be benefited going forward. And we all know what has happened to that sector in the last 1 year. So we value every word that you tell us. And we remain ever grateful to you for this. This year, as you know, as you also said, we wanted to have this physically meeting in Dehradun, and our clients of Dehradun would like to meet you in person as and when Omicron subsides and we can physically get you in Dehradun and spend some time with you. Thank you very much.
Thank you, Samvijit.
Many congratulations, crossing 3 lakh crore, 5th largest AMC in the country. Literally a vertical rise in the last 4 years, and we are very grateful to be partnering you in this growth. Thank you very much. On behalf of
Thank you, Samvijit. Thank you.
Thank you, sir. I thank everyone for your time. Take care. Stay safe.